All right, everyone. Welcome back to the fundraising track at Austin Startup Week. Hope you enjoyed your time networking and were able to make a few valuable connections. Be sure to use that networking feature whenever you're free because you really never know who you're going to meet. Next up, we've got a great panel on fundraising alternatives to VC. As you heard, if you were able to attend the fund economics panel earlier this morning, venture capital funds have a very specific criteria and return expectations when they make investments. Carrie Rupp from True Wealth Ventures actually touched on this in the last panel as well, but not every startup's a great fit for the VC investment model. Luckily, venture capital is not the only way to fund your startup, and there have been great giant businesses that were built without raising any VC funding at all. In this next session, we'll talk about some of the other alternatives that are available to help fund your startup, ranging from crowdfunding to revenue sharing, tax incentives, all the way to government grants. So with that, I'm really excited to welcome to the stage Ari Palmer, founder and CEO of TaxTaker, Jody Page, director at Lighter Capital, Carol Campos, a director at Republic, and lastly, Alan Thornton, CEO at GrantSource. Guys, thanks so much for being here this morning. Really excited for this panel.
Thanks so much, Jake. We're so excited as well. It's really a treat to be with all of you today. So yeah, we're going to talk about how venture capital isn't the only way to fund your startup. We've got a phenomenal panel here. I'm so excited to be with each of you, Jody, Alan, and Cheryl. Just to give you a little bit of background, I'll just go ahead and hype these folks up and give you a background on the panelists, and then we're going to jump right into questions. I do encourage you, if you do have a question, to pop it into the chat bar. Those are going to be forwarded to us, and we'll try to address those. But the great thing is, if we don't get to it, we know your number. We'll definitely be able to get in touch with you afterwards, because I know we have a lot to cover. So without further ado, first up, we've got Alan Thornton. He's the founder and CEO of GrantSource, who helps organizations find money for their mission. His background is pretty diverse. He's got a background in enterprise software selling, more than $23 million worth of software, but he's got a mission and passion for social impact. He started GrantSource, which joined the Capital Factory Accelerator, I believe, last year, because he was actually burned by a grant writer that stole his money. So maybe we'll hear a little bit about that. But it took him years to build out a platform. But since he launched GrantSource, he's helped actually organizations find and secure over $10 million since just beginning in 2020. It's amazing. And then we've got Jody Page here from Lighter Capital. He spent the majority of his career in the financial industry for 20 plus years and 4+ years in the private capital markets with a startup that I think most of us would be able to recognize called Pitchbook. So inspired to actually deploy capital after being at Pitchbook, he joined Lighter Capital in 2016 and has since executed over 90 fundings into 40 companies. He's a graduate from the Carson School of Business at Washington State, where he's also a guest lecturer. So extremely founder friendly here. And so we're really excited to get his take on Lighter Capital and revenue-based lending, because I know that's been increasingly more popular and a great route, in addition to Alan's background with grants. And then, of course, Cheryl from Republic. Really excited to have Cheryl here. We actually have, at TaxTaker, we actually have some clients that have run some really successful campaigns through Republic, notably Turnio and Rocket Dollar. And I know a Capital Factory company recently launched there, our friends over at Blended Sense. So it's just an awesome platform if you have not checked that out. But Cheryl's passionate about finance and technology and social impact as well. She's the head of venture growth and partnerships at Republic, which is really, if you haven't heard of them yet, it's the one-stop shop for founders to raise capital from both accredited and non-accredited investors. And so she's really focused on underrepresenting founders to these alternative funding sources and able to better help, just startups thrive. In addition, she works on partnerships with other VCs and ecosystem builders while supporting over 150 portfolio companies. And Also, just really casually, she holds a BA in economics with honors from Harvard. So thanks, Cheryl, for being here. And then just to introduce myself, because I guess I haven't yet. My name's Ari Palmer. I'm going to be the moderator today. I'm the co-founder and CEO of TaxTaker, and we're helping startups access the #1 non-dilutive funded program for startups, being the research and development tax credit. So today, we've actually, in just the last year, have secured over $5 million for our startup clients and are on a mission to save billions. So I think we're all in just great company here, really excited to kick off this panel. And really, I kind of wanted to start with kind of a more general question. We hear about revenue-based funding, so I want to hear kind of what that's like, as well as raising on Republic and some of these grants. And maybe this kind of is the answer. What might be some of the non-obvious benefits for founders leveraging alternative funding? So I would really like to kind of hear from you, kind of each of your spiels, but yeah, what's kind of non-obvious? What are things that we're regularly missing out on?
Yeah, I can go first on this side. So thank you so much for introducing me. And I'd like to say that we call ourselves crowd investing because people like to think, oh, Kickstarter, Indiegogo, and that is 100% not the case. We essentially took the Title III to Jobs Act that allowed non-accredited investors to finally invest in startups and made it into an infrastructure and a technology platform that allows anyone around the world to invest in startups that they believe in, right? And so whereas previously 97% of America was locked out due to the accreditation rules, we now have democratized access to investing and fundraising, right? We have 40% women founders. We have 25% Black and Latinx founders. We have founders in over 30 states. We have about 4 or 5 capital factory companies, so hoping for more. And so to that end, it's really, we didn't go and create this with the intention, but because of just the sheer nature of the platform and that anyone can put in their dollars as low as $50 into a company that they want to see grow and hopefully exit, that is something that I think is very powerful. I truly believe in the power of community, power of numbers, and everyone together working towards a certain goal. And so in terms of benefits for working with us, right, we're both a complement and an alternative to VC, right? Actually over 70% of our companies have raised VC prior to Republic, and on average 1.5 million from VCs. And so these are, mostly seed Series A companies that want to either top off their round with a Republic raise, they want to engage their customers and have them become investors, or maybe they just, wanted a bridge to get to the next level and potentially have higher metrics to then have more leverage when they're discussing with VCs for a future round. And so to that end, it definitely helps you complement what you already did in VC, or if you're bootstrapped, which is about 30% of the companies we see, this is something where you are able to set your own terms and you're able to really engage all of those people that you probably wanted to invest, but couldn't put in a 25K check, right? And so this is something that I think is very powerful. We have, just in general, I think most of our companies have seen customer growth, new lead gen that comes out of the campaign. They have raised, you can raise up to $1 million on the platform. And so we have seen people who have come again and have done repeat campaigns because they had such a great experience. And so to that end, we want to make sure that there are benefits to this. And last but not least, it's one line item in the cap table. So even though you have 5,000 investors in your campaign, it's all one line item. They have no voting or information rights. And the investors only get a return when the company either IPOs or gets acquired. So we spun out of AngelList in order to create this because our CEO was a former general counsel of AngelList. And so he kind of knew all the rules. He was friends with FINRA, SEC. And so it was just a really great way to kind of leverage the law and in a way that would also be very friendly for founders and VCs. So that's my quick little spiel.
That's awesome, Cheryl. And I love what you touched upon on that. There's no perfect recipe for every single company. There might be a perfect recipe for a specific company, but there's no perfect recipe for all companies, right? So kind of looking at Republic and Grant Source and Lighter Capital, these are all things that we could potentially be complementing at any given time. And even like you mentioned, come back. We've seen in some of those portcos that I mentioned earlier, they've run several campaigns through kind of based upon their needs. Yeah, Alan, did you want to touch upon that?
Absolutely. No, thank you for that, Cheryl. That's incredible. So a few of the things, and grants are something that a lot of people miss out on just because they don't know where to start, right? And when we talk about non-dilutive funding, everybody gets so enamored with VC money, and that's great, and it has its place. But at the same time, if you know and have a sustainable way to get grants, there's a plethora of different grants out there, depending on what you're trying to do. And in this day and age, right, we're in the cause selling generation, right? Millennials are 70% more likely to buy or spend more money on something that has a cause attached to it. Many of you in Capital Factory are there in Austin and already have causes associated with what you're doing. So if you know how to package that and to have the right message to the right funder at the right time, you can capture some non-dilutive funding. So appreciate it.
Amazing. And Jody, you've seen a lot of kind of these hybrid approaches. It kind of sounds like, a lot of times we're just as founders, we just don't know where to start. We don't know what tools are available to them. Is that kind of something that you see when folks are checking out Lighter?
Exactly. Yeah, I think so. I mean, it runs the gamut. I would say not to the same degree that maybe Cheryl's seeing on her side. Maybe about 10% of the businesses that we funded have raised a Series A prior to working with us. And I think roughly, give or take, about 20% of the businesses that Lighter works with, and that's a number that's north of 200, have also, successfully raised, VC. So call it kind of the upper 20% that have gone out and successfully done that before or after, coming to us. I think I to Alan's point, I call it the lure of institutional validation, right? That this professional investor class wants to come in and believes in what you're doing and wants to give you, all this money, oftentimes, more often than not, 7 figures, right? A couple commas. And that is great validation, but I think the thing that gets missed oftentimes is what you're introducing into your business when you do bring in that kind of money. And I think that if you do it too early, you may find yourself misaligned, and you need to understand kind of everything that comes along with venture capital. And very much like the other folks in this group, we're complementary. We're not adversarial with VC. I have great relationships with the VC community, and as we've progressed over the last decade, I think they're starting to recognize us more and more as kind of a leading indicator of investable businesses, because not all businesses are VCable, right? And it's not an indictment on any one given business model. There's an objective that VC has when they come in, and frankly, it sounds kind of crazy to say out loud, but they're like, they want to make like 5x, 10x their money. I think it's like an entire asset class that's built around chasing hyper returns. And it's worked to some degree, but I think it's got a little warped over the course of the last decade or two in terms of the expectations. And I think that's what's created rooms for a lot of these alternative sources, of capitalization. In our case, we use debt. We're not underwriting. The way I like to describe it is we're not underwriting to some future event or a strategy or an exit or a raise, something different. We're actually underwriting to the fundamentals of the business. So the businesses we work with tend to be more capital efficient, out of necessity, because they probably either bootstrapped or maybe took a little friends and family money, but they haven't gone out. They don't have these big war chests to work with. And so they have to find ways to be scrappy. And I think it's a great way for businesses to grow. And I think those businesses that are outside of, kind of the key markets, for VC, kind of the Northeast and, the Bay Area, obviously, Southern California, I've done a lot of work in that market, as we spoke about earlier, Ari. And I think, you got to make sure that you're engaging that kind of money at the right time. And if you can use grants or debt or I don't even know what to call it, what Cheryl's group is doing, it's unique. I haven't heard about that
Crowd investing.
Crowd
That's the new
investing.
Crowd
word.
investing.
Yes, crowd investing. These are all methods to get money onto the balance sheet and grow the business, and more importantly, things are not going to be as distracting while you're pursuing the dollars, and then after the fact, what do you have in your business? Because once again, VC is always going to have, more often than not, they're going to have board seats. They're going to want to be into what you're doing strategically. There's and they're going to have an expectation of your timeline and when you exit, because they have their own fund cycles that can be hugely impactful in terms of what outcomes they're looking for in those timelines. So those are some of the things that I talk about when I'm trying to differentiate between, what Lighter does specifically, but more what VC and what VC does and how it behaves.
Awesome. Jody, you touched on probably like 4 or 5 questions that I have. So I'm going to just start with like a kind of a 1-2 combo, and then we'll go around the room there just because you were just talking about it. But I think, with revenue-based kind of sharing or funding, a lot of folks are wondering, how much revenue does a company typically need to be generating to be, a healthy or strong candidate for a program like Lighter Capital? And I think that also speaks to kind of, how traction matters, right? And we see traction really mattering on platforms like Republic too, even if they're pre-revenue, it's user traction or other metrics. But is there kind of a range where you see that, Lighter Capital will be interested, or typically folks are doing well?
Yeah. I mean, we'll actually get involved pretty early with businesses. I think the smallest check size we'll write is at $50K. What I tell people is, generally speaking, we want to see you flirting with maybe $20K monthly recurring revenue. So in our case, we're very much focused on what I like to call kind of sticky revenue, high gross margin, technology driven business models, which would mean SaaS is right down the middle of the plate for us. But, I've done some B2C, subscription box stuff, we've done some digital media stuff. I mean, if we can kind of reconcile a model around those 3 pillars that I called out, then that's something that would, potentially make sense for us. And then the other thing that happens with us quite often is, businesses will come back. I think somewhere between 40 and 50% of the businesses that we've funded, roughly 400 in our lifetime, have come back for at least one additional tranche. I've done as many as 9 into a single setting. And so that kind of that take what you need approach to capitalization, I think just is something that just further reinforces that capital efficiency thing that I was talking about.
Amazing. Thank you. Well, with the nature of us being virtual today here, it's pretty amazing that we don't all have to be in Austin, Texas. Austin can be everywhere now, which is
I want to be in Austin.
I know.
I want to be somewhere else.
It's a little disappointing.
Jody, where are you?
I'm in Seattle.
Oh yeah.
Okay.
That makes sense.
I know. I love Seattle. I just don't want to be
with
here
the Starbucks cup and everything.
Brand rep right there. Amazing. Yeah, it is such a special event. I mean, there's hundreds of attendees here even today and throughout the week at any given time, and it is powerful when you feel that in person. So hopefully next year we'll all be together in person. But I mean, to that point though, right? We can all plug in at any kind of time. And earlier you kind of mentioned, some of these areas that might have been overlooked for money or funding, they were just at a disadvantage. So I kind of wanted to ask the group, and this also speaks to kind of some of the kind of realms that the group is passionate about on helping underrepresented and underserved founders and minority founders. Have you guys seen companies, doing well in areas that maybe they were disadvantaged before, or, have you seen kind of underrepresented founders being able to kind of leverage some of these alternative funding sources as well? It's kind of an open question.
Absolutely. So I'll take that one to begin. So we're in a time in our country. It's a unique time. Won't get into political beliefs, but as everybody knows, there is social unrest. So if you are a minority or African American founder, just because of the state of where our country is in, it has brought light, and a lot of companies have certain diversity funds, whether that be, and you're probably seeing VC funds, but there's also right? Because VCs and crowd investing, people are looking for, right, the user traction, the revenue traction. But in this day and age, if you have impact traction, there's a way to go get grants, right? So it's not about the money in the beginning. If you can create impact, there's a way to go out there and find money for the impact that you're creating, which is huge, right? And we've seen founders that are brand new startups have good technology and get funded up to, $1 million, our clients,
Wow.
right, within a few months. So there's a lot of government grants out there, which is huge. And if you have tech, go out there and find some of this grant money. And if you need help, that's what we do. We can definitely help you navigate that system.
Yeah, I actually love that, Alan, and let's definitely talk about more ways that, we collaborate too, because we see over 5,000 applications a year, right? And we have less than like a 1% acceptance rate at this point. And COVID, obviously, when Silicon Valley kind of shut down for a while, we got an influx of applications. And so it's more about people just looking for any type of source of capital that they think might be a good fit for them. And so we definitely still want to steer them in the right direction, depending on where you are. So let's definitely talk. Same thing, Jody. I know Lighter Capital well, actually. So, want to make sure that we're referring all the right deals and make sure that they are also being serviced by the capital that they need at the right time. So for us, 40% of our founders are women, which is incredible. We actually acquired SheWorks, which is a 25,000 woman community, global community that allows really women to learn from each other and grow and scale. So that's what we acquired last year. And just to truly be committed to building diversity within our pipeline, especially as we scale, because we're going to help 100 companies this year. We have created a venture partner program that actually brings in VCs, accelerators, ecosystem players that are really interested in kind of championing Republic in rooms that we're not in, and then they in turn give us access to companies that we would have seen otherwise. So there are Republic cities like Austin, Atlanta, Dallas, LA, Chicago, it really runs the gamut in terms of where all these venture partners are and representing us in cities where we are generally not in, and kind of getting us deal flow from all these different demographic and geographic locations. And so for us, it's just being very intentional about what we're doing, scaling that, and continuing to offer services. So for when Black Lives Matter happened, we actually created a $75,000 pool of capital that would help support Black founders through the platform. And so that is something that, we wanted to do and know that's needed. And so we also created a nonprofit arm to kind of help and support scale, that 75K into a much larger sum. So just try and make sure that we're doing our part as well.
Phenomenal.
Wow, you guys kind of covered everything.
Listen. Go ahead.
I think Lighter doesn't have necessarily a DEI mandate or anything along those lines, right? But I think the thing about our model and what we've always touted is that we take kind of an unbiased quantitative approach to deploying capital into businesses in the context of this debt structure. And I don't think it's an intentional thing, but I do think VC can be a little homogenous, I guess is the best word. In that they tend to you tend to fund what's familiar to you, and that's really cut out a lot of it's cut a lot of talent out of the mix, right? And so these alternative sources of capital are hugely critical, right, to making sure that these underrepresented groups are getting access to money to grow their businesses. At the same time, I think, hopefully what's going on right now is going to elevate, the inequities that exist to a level that maybe we start to see some meaningful change, or maybe we start to see the limited partners, particularly the larger limited partners, applying pressure to the fund managers to have kind of a DEI component to their investment strategy, similar to what you see going on in kind of the ESG space in terms of mandating that, there's certain, carbon footprints or, anything that would flow through to the desired outcomes, which is, a more diverse group of people having access to various types of capital to grow their business, because VC very much plays a relevant role in the success of businesses. And I think that's something that I wanted to highlight, is that we're not here to beat up on VC. We're just here to say, hey, look, there's other ways to capitalize. Yes, it's really great to be able to access that kind of money, but there is a lot of headwinds in trying to access that kind of money. And one of the biggest impacts of going after VC is it's the volume of time that it takes to pursue it, and taking your eye off the proverbial ball. And I've seen businesses have some negative outcomes because they got a little too focused on that piece rather than the operation. And so I think for Lighter, that's really part of the value proposition, is that we're going to try to process this through for you very quickly. We want you to remain focused on the business. And then we also really want to kind of be out of your hair. We want to be a capital partner, but we at the same time, we want to give you room to do what you already demonstrated yourself as being able to do.
I've seen that being talked a lot in the founder community, especially over at Capital Factory, on this time commitment, right? Sometimes taking, fundraising itself or going after capital, it's a full-time job for a lot of founders, and they can easily take their eye off the business, whereas maybe they'd be going for the same amount of capital that they could have gotten through sales or customers. And I know that that's a big challenge, kind of measuring, what's going to give them, more growth. Right. That's really interesting. And I did see a question come from the audience around, specifically for Cheryl, around that Republic boasts this really great 95% success rate for companies that go through the platform. And this was going to kind of speak to a big question that I know the audience had around on COVID and what we generally think, if we think, how COVID has impacted for better or for worse, the state of fundraising, and maybe changing kind of the landscape to look at alternative funding. Clearly, right before we started, Cheryl had mentioned that she was onboarding two new full-time folks. And so that's an immediate tell that, that the state of fundraising is very much here, and that they actually need to hire on to fill capacity. So I would love to hear from all of you kind of how you've seen COVID impact, the state of fundraising, especially for alternative funding, obviously, with this being the topic, your networks and your clients.
Yeah, so I'll touch the first question about our success rate. And it's about 90% now, just given how we're scaling, right? We are trying to bring in the best companies possible. And we have 800,000, users on the platform. We can generally fill anywhere from 50 to 75% of a round, which does mean that it's a partnership, right? At the end of the day, the company does have to engage their community, friends, family, customers, all the people that they think could really get into a round. When the company ends up launching on the platform, we ask them to raise $25K just through their efforts, which, by the way, we help them with marketing. We deploy $2,000 in Facebook and Instagram spend of our own money to see what their return is. And kind of get them, though, to put in the legwork, because we've been burned in the past, quite frankly, when we started to announce them to our investor base at $0, and then they would just expect the capital to magically show up, and that's not how it works. I think it's definitely a relationship, and so once they hit that mark, we end up bringing our entire base through email marketing, through social media marketing, and all that good stuff. So we have an internal marketing team. We have built a strategic playbook that gives best tips and tricks. And so we are making sure that they are supported every step of the way. In terms of more just COVID in general, yes. At first we were a little bit scared on the investment side, because we were like, oh my God, people are going to save their money. Like, they're probably not going to invest. Like, what's happening here? And so we did see a little bit of a dip when the first week or two that COVID hit, and then we saw it spiking. And the reason why is because as more people either save money because they move back home, or they just don't trust the public markets right now. I currently heard that it's not like a bull or bear market, it's a kangaroo market, which I've never seen, like heard before.
Jumping around.
Not sure what that means, but sure, like just all around, all over the place. And so people are taking their money out of there and trying to invest in it in other diverse assets. So it's been a real boon for us. And so we've been trying to, capitalize that with bringing in the best startups possible to, kind of help encourage them to further invest. And we also have a whole influencer kind of movement going around with Karen Harrington, John Najarian, Wendell Carter, and a couple of really big names coming up. So super excited for all of that to encourage more retail investors to invest.
Amazing. Some OG Shark Tank names I've heard. Right on. Alan, would love to hear from you kind of the state of grants being issued during this time, companies being able to take advantage of those. And there was another kind of question from the audience around, are there any constraints put on the business when they're kind of going after some of these grants around their technology, et cetera?
Yeah.
Would love to hear your take on the state.
Absolutely. And first and foremost, I want to echo something that that Cheryl said. Grants are not, and I tell all my clients this before they even become clients. And we tell all of our friends, families, brothers, mothers, sisters, cousins, right? Grants are not magical. It's not the lottery, right? It takes money to make money. You have to be creating real impact. So let me just say that up front. They don't just drop out on your lap, right? It takes some work to get there, but there's people like us that'll help you create that impact if you don't have it. So there's a couple questions, and I'll answer. Bill had a question about, hey, is there grants for taking away outsourcing and putting them in the US for like drones? So think more about, when you think about grants, don't necessarily think about, oh, I have this widget, right? I have this widget and I want grant money for it. And we get calls like that all the time. Think about more of what you can do with it. So Ari talked about COVID. COVID is a huge buzzword right now. So taking that same drone, if you can find a way that drone can reduce the government burden and help, these drones can help different cities, municipalities with the COVID outreach or with detecting something about COVID, you have to attach it to an initiative that one of these funders have, one of these government agencies have, no matter of what level they're at, right? Federal, city, county, state. Another question was, hope that answers your question, Bill. Another question was about nonprofit funding. Does it put constraints on commercialization of technology being developed? So this is another thing. When you think about structure, it's people say, okay, I want to go after grants. Should I do a nonprofit? Should I do a for-profit? Which one should I do? And the answer is yes, right? It shouldn't be an either or. You just heard Cheryl talk about she has a for-profit, but she has a nonprofit that went after a certain initiative. As a startup, and we're all in the same boat, right? There's three things that we have to do. We have to go after market education, right? People have to know who we are, differentiation, education, and then people have to know about our product, right? Our product differentiation. A nonprofit is a great way to educate the market about the problem that you're able to solve and to go out there and to show the impact that you can create. And a lot of times you can get grants like that, right? I've gotten a number of companies 120 grand to do marketing education of their product and service. And then these are two separate entities. You can still sell your product, your service, your technology within your for-profit, but the main thing is go out there, create impact. And COVID, for us, I mean, COVID has been, I heard a quote or saw a meme, don't let a good pandemic go to waste, right? It's been an incredible time because you can reach more people in more time during a pandemic, right? I didn't have to go to Austin today. I'm running school in the other room, right, with my little girl, and I'm, in the middle of a great startup week with hundreds of founders, and it's been incredible. So just mainly focus on creating impact, focus on the initiatives that governments, funders really care about, and we're in Q4. What that means is there's hundreds of millions of dollars that companies have to spend by the end of the year and invest in certain initiatives. So if it's COVID, if you're doing outreach, if you're doing any type of technology that can reduce the government burdens, if you're doing and working on alleviating homelessness, if you're working on doing anything that helps nonprofit investing. So I have a company in California, and this is crazy, and I'll finish here. When I was in school, when I was a kid, there were a thing called pleather backpacks. You know what that is, right? It's fake leather, right? That same, this is the Bill's question, that same cause, they sell vegan backpacks, right? And they got grant money for it because there's vegan funders. It's a fake leather backpack. So find a way to attach to a cause and create impact, and then we can go find you grant money. So.
Amazing. I love that. It's budget season, it's selling season, and it's vegan backpack season.
Yeah. Vegan backpack season. I'm in Texas, I like meat, right. But you know. Yeah, backpack is good.
I love that. That's what you can have. Yeah, a plant-based kind of juice land right next to a barbecue stand. Yeah, everything here in Texas. Only in Austin.
Only in Austin. Right. Right. Well, I think lighter. Last 6 months have been a little different for us, right? Because we have service debt relationships with over 200 companies, right? So, rewind to mid-March and, the whole world changed essentially. And, for our first couple months, it was tough. We had to really go into triage mode, and we needed to understand how every company was being impacted and then really kind of what their strategy was to kind of navigate this unprecedented experience that we're all having right now. And there were some really tough conversations. People I've been working with for years that were taking major hits, and it was no fault of their own as operators. It was really outside of everybody's control. I think, some interesting statistics that, came out of the portfolio. And I think our portfolio is a bit of a microcosm of what's happening in SMB, and more specifically, kind of early stage tech. We saw, roughly, I think it was north of 80% of the businesses that we support were able to access things like PPP. That flowed through materially to their runway. So, over the subsequent, few months, there was definitely a stabilization. I've been funding new businesses the entire time. I think it's either 5 or 6 new businesses that I've been able to fund, over the period of COVID, and things are starting to accelerate. So you're starting to see things loosen up a little bit. And obviously that's great for me because my job is to get money out of the door, right? I don't necessarily have the bona fides that Alan has here, or even Cheryl, but I did for a brief period of time prior to joining Lighter. I jumped into the mission-driven organization. I was actually the chief operating officer for an all-girls middle school here while it was going through a transition, and it was kind of my first exposure to mission-driven organizations in terms of working inside of them, but more specifically, kind of getting a feel for how people like to write checks to mission-driven organizations, and the commonality that I found between what I do in for the majority of my career, which is in kind of for-profit environment, and what I saw in the mission-driven organizations, is that the motivations for the investors are actually quite similar. They want to invest in winners, be it a mission-driven initiative or a for-profit initiative. They behave very similarly in terms of the questions they asked and the outcomes they want and the plans they want to see. Ultimately, they want to know that people are going to be good stewards of their money and drive the intended outcomes. And I think sometimes that gets lost a little bit inside mission-driven organizations because they get so caught up in the mission, they forget that we need to be a high-quality operation as well. And so, for those of you out there that are pursuing mission-driven initiatives, I would encourage you to think as much about your operation and how you're going to grow and scale a successful operation as much as you're thinking about, how you're going to impact whatever area it is that you're looking to drive. Because ultimately you have to build a sustainable business in order to execute, even if it is a not-for-profit endeavor. And that was one of my big takeaways from that experience sitting in that role. The other was reporting up to 25 board members that were basically all, Microsoft execs and Amazon execs and Gates Foundation execs. And that was an interesting experience as well that I'm still traumatized by to some degree. So we don't have to talk.
We all have a little PTSD from something we've done in the past.
Right. I'm not rushing back to a board reporting role. Not at this stage. Not right now.
No, that's so important to think of, for these nonprofits, especially, right? Like donors and partners are just as important as for-profit customers and partners as well. I would love to hear, because we're talking about alternative funding as in conjunction with institutional or as opposed to institutional. And I would love to hear from y'all if you have any recent examples where maybe you're meeting with a founder that has, been evaluating both, or and they went the alternative funding route, and that really propelled their business. Would love to hear any kind of recent success or case studies around that from each of your prospective companies.
Yeah, on my end, just quickly, we did have a company that raised a full $1 million. They were essentially a B2B hardware and software play. And so what was really interesting from their side was that they were connected to an investor that, invested in their campaign, but was like, hey, I actually have a brother that owns a ton of like NFL stadiums, and I think I can connect you so that you can offer your service. And through that, they were able to secure $750,000 in kind of actual customer revenue, which I thought was really incredible for the annual revenue at least. So, but they were able to secure the contract. They were able to kind of grow their business just because of the power of the numbers, right? Power of connections. And we had another company too that was more of a pre-revenue company, but had 40,000 users in the freemium model, and and it was for kind of the Gen Zs, where one of the Gen Zs loved it, told her father, who was an angel investor. Then the father put in an extra $1 million casually outside of the campaign, because he loved that his daughter was using a product that was seamless, and he just saw that there was a lot of value to that. So once again, all power of numbers, power of connections, why we're all here, why we want to learn, is really just how kind of Republic has that power. We did just launch something called Social Capital, where now if you're an investor on Republic, you can go ahead and say how you could potentially help the company as well. So maybe you're a retired lawyer, or you're a retired accountant, or there's some way that you can assist. You're able to put that and opt in, so that when you become an investor in a company, they can call you for things, right? And they can say, hey, you wanted to be a value add investor? Like, I actually would love your input or opinion on this. And then you can actually be involved in the startup where, I don't think there's any other place where you can do that. So I think it's incredible. And we're just continuing to level up on that area.
That is so exciting.
Well, and Jody and both Cheryl said this. I think as founders, we get lost, and no matter what, we got to keep the main thing. You have to go get a customer, right? You got to grind out there and go get some money, because that makes you more attractive for everything, right? Whether you're a nonprofit or for-profit, you need to go out there and make money. Here's why. And the first question, everybody sees this. Everybody's watched Shark Tank, and the first question they ask, and some people are dumbfounded by it, is how much money have you made? Right? And the same thing with grants and funders. They'll ask you, how much money have you made? Because that means that you've put time, energy, and effort into that. So go get some customers, go get grants. Grants make you also more attractive to investors.
100%. I've seen that in so many deals where, if you have these extra kind of value adds, or you've done your homework, you're really casting a whole lot less doubt for those investors, regardless of the funding source, but especially institutional. If they see that you have grants on your books, or R&D credits on your books, or, you're leveraging all these alternative ways to remain capital efficient, I mean, you're going to have a whole leg up on the other kind of folks that are trying to raise money from those same investors. So showing up and doing your homework and taking advantage of everything, it all comes full circle. Right. With that, we only have 1 minute left. This panel has gone by so fast, but Jody would love to, you want to?
Yeah. Listen, Alan, you touched on something that really resonated with me, and it's something I reference very often in my own professional life, and it's a Ralph Waldo Emerson quote. It's called "Do the thing, and you will have the power." And one of the things that I've always kind of leaned on anytime things have been tumultuous or and I've seen it happen in a lot of environments is you know, people have their comfort zones, and they oftentimes those comfort zones are not aligned with the thing, right? The thing for the business, and they want to highlight that as the thing, and it becomes distracting over time. And you know, being resolute and really boiling it down to what is the thing, what is it that we do, and placing your focus on that and not getting too distracted from it. To me, those are the things that really matter in times like this. So thank you, Ralph Waldo Emerson, for that quote.
What a wonderful
Thank you guys
quote to end on, and what an awesome panel. Thank you all so much. Do the thing, you'll have the power. Look at alternative financing and go get it. Go crush it.
Yes. Love it. Yes. That's the quote of the day, guys. Ari, Alan, Jody, and Cheryl, thanks so much for your time today.
Thank you guys.
So important.
Have a great rest of your startup week, everyone.
Yeah. Guys, it's so important that founders understand these alternative ways to raise funding and continue growing their business beyond the traditional venture capital route. And I particularly liked the point that Jody made early on that, you know, not raising venture capital is not at all an indictment on a business. It's just not always a fit, and understanding that is really key for, you know, founders so that they can focus back on building the business. So again, thank you all for your time today. It was a great panel.